May profits be upon you. Welcome to another weekly market forecast. We're going to look at the NASDAQ futures, the NASDAQ futures. All right. This is NASDAQ 100. And as far as the economic calendar for the week ahead, nothing happening on Monday. No red folders. Tuesday is the big day. We have CPI coming out. Core CPI. This will let us know what the state of inflation is in the U.S. If the number comes in hot, we're going to see the U.S. dollar gain strength. If it comes in soft, we will see the U.S. dollar weaken. All right, and that's going to have a huge impact on the U.S. dollar pairs in the forex, as far as Euro USD, Pound USD, NCD USD, Aussie dollar USD, and the rest USD CAD, USD JPY, USD Swiss. I had to name them all for some reason. I don't know why, but it is also going to have a high impact on the equity markets. Now, there's a lot of news going around with the equity markets. As you can see, the headlines: NASDAQ top and bottom performance stocks, individual investors, bear stage, or whatever. Wall Street set for weekly gains. This is all up till last Friday, right? And they are the feeling is optimism in the markets because uh, they feel there is a 90% chance that the Fed will cut rates on the next meeting, the next FOMC meeting. So, and then you also have the U.S. President Trump nominating someone that is definitely looking to cut rates. Right? They are definitely dovish, and so the feeling is, you know, optimistic in the markets and risk on. All right, look at the monthly time frame here. This look at this market, and then look at the S&P, the Nasdaq, the S&P. Very subtle differences. All right, very subtle differences. So it's going to basically be the same uh, forecast. All right. But what I want you to see is you see how price moved down. We had the Trump declaration of freedom or whatever, or with tariffs, brought the market down. Then we had a quick rise in April. And then from there, price moved inefficiently up, creating these imbalances along the way. But the market is not coming back to use those imbalances to propel it higher. It's just moving higher. All right. There is a feeling of emotion, optimistic emotion that is fueling that. All right. So we have a market that's moving up. There's no reason to think bearishly. All right. If we look at uh, uh, the weekly time frame, you can see clear breakup market structure, and price is comfortable trading above that market structure. And you see how it came back to the breakout level. And then last week, we had a very strong week with a very strong close, a very bullish close. We also have a weekly fair value gap that was not tapped on the way up. Didn't use it to, it didn't need it to move higher. So it continues to move higher. All right. No problem there, right? All right. You see, it took the sell side liquidity before it did so, but I want you to study this now. This is daily. What do we have? Thursday, we had that 3.5 uh, some odd percentage. I think it's 3.5% pullback. And then you see the recovery on Monday, and it just closed at the high of the previous candle. This created a order block, a bullish order block. All right, price comes back inside that order block on the very next candle on Tuesday's candle, but you don't want to see it go past the midpoint of the order block. That would be here, right? You don't want to see that. You want to see the market uh, turn, bounce, find support before it gets there, so we can see that it's showing strength. If it goes past the 50% of the order block, down to the 75%, or maybe even the 25, the last 25%, I'm sorry, see a 75% pullback in it, it's kind of weak. It's showing weakness. All right. But in this one, we went to the 50. You see, this is the 50% line right there. And you can see it pushed up higher, closed above the previous candle, which also shows bullishness. It shows strength. All right. Uh, and we can close with that order block here. All right. Because we closed higher than the previous candle, the one that came into contact in with the order block, uh, we're going to be looking at this candle as a propulsion block. All right. And the candle that follows this one, all right, the one that closed above the previous candle high, we want to see price move back into that, come and touch it. And this is where you would, if you were a uh-oh, something's not right. If you were a swing trader, I want to get rid of this thing. Yeah. If you are a swing, that was the one I wanted to get rid of. If you are, oh my goodness, I'm sorry. If you are a swing trader, this is where you would wait till price comes back to the propulsion block, and you would put it behind the the low of the body, the body low of that propulsion block here, and you would be looking for 2R at the very least, and this would be a perfect trade to these highs, and you would price pull back down to it, hardly gave you any drawdown, and you would be good to go. That would be a good swing trade. All right. If we look at the weekly, if we go down to the 4R, I want to show you something. All right. You see this move down that happened the previous Thursday. You can see that there was an inefficient price movement here, an imbalance, a fair value gap, and this is a bearish one. All right, and we would wait for price to use it to go to make lower prices. Price did come back to it, recognized it, or rather respected it, moved down, and then moved back up. That inverted it. That inverts this bearish fair value gap, hence the color, and you wait for price to come back to it, and you would see price use it as supply as a support rather than resistance. Got it? Now, how does that play out over here? Same way. Look at this. You can see there was another bearish fair value gap here. All right. Price moved up into it, gave it respect. It respected it for a couple of candles, and then you saw a price moving past it. All right. That means this line becomes inverted. Price came back to that inverted fair value gap and moved up higher. Some people don't believe in uh, uh, inverted fair value gaps. That's fine, because there's usually a bullish fair value gap right under it, and price created another imbalance to move higher from. This becomes again an order block. The down move, the down close candle overtaken by the buy up, just becomes an area of fair value. It's also an order block, right? And you wait for price to come back to it, and it will hold and move price higher, acting as support. That was a bunch, right? You can see the daily fair value gap that was here. Price danced on it, came back to it. Instead of using the inverted fair value gap, you could use this the daily. Price came back to it, showed it respect, and held and moved price up. All right, the same way it happened here. All right, we have the down. Sorry, we have the down close candles, and then the buy up that takes over, that takes them over. This is the the order block. That's it. Price moved up from that order block and came back to it. Found it as support, and there is a huge bullish fair value gap right up here, right there. What did price do? Tap into that bullish fair value gap, and price just jetted forward. There was a number of confluences, a number of overlapping arrays that allowed you to think there's no reason to be looking for shorts. You understand? That's it. That's what you're looking for. Those things that support higher prices. If it was bearish, then we would have been looking for bearish. But we had confirmations. So that's it. There's no reason to take shorts right now. I think we're going to be heading towards that high. Hey, check this out. S&P. This is the NASDAQ. Look at the S&P. What do you see? Oh, look at that high. Look at the NASDAQ. Oh, look at that. We broke high. That is an SMT. That is an SMT. A smart money technique. All right. This is a divergence between these two correlated assets. All right. If price starts to move down, if price starts to weaken and starts to starts breaking structure like this low here towards these ascending lows, all right, for liquidity before it makes another move up. This is the market I would take as the short for the short, not the NASDAQ, because this one is a little stronger. You understand? That's the way it works. I hope you appreciate what I just gave you. Anyway, I will see you in the next video. Thank you for watching this one, and hit the like button, hit the boost button. Make sure you check out the other analysis that I put out all day today. All right, I put out one for the U.S. dollar index, the Euro USD, the Pound USD, the Aussie dollar USD, NZD USD, and the gold and silver and the S&P and the NASDAQ. I hope you like them. Make sure you leave comments. I need those comments. All right. I like to involve myself with my viewers, answer questions, and love to see what their point of view is, what their perspective is. I answer every last one. I respond to every last comment. All right. I'll see you in the next video, and thank you for watching again.